Hello everyone. Good afternoon, ladies and gentlemen. Welcome to the investor meet of Bayer Cropscience Limited. I can see over 35 attendees and some more are still joining as I speak. Let me first introduce our speaker for this meet, Mr. D. Narayan, Vice Chairman and Managing Director of the company, Mr. Simon Wibush, Executive Director of the company, and Mr. Simon Brish, Executive Director and Chief Financial Officer of the company. The sequence of today's meet will be to start with presentation by the management team, followed by question and answer session. We have received several questions by email, some of which will be covering during our presentation, and rest of the questions will be taken up in the Q&A session. If you have additional questions, please locate at the chat icon at the bottom of your screen and send in your questions to us through the chat box. We will attempt to answer as many questions as possible, with the exception of items of commercial confidence. Considering time constraint, if any questions remain unanswered, please reach out to us at ir_bcsl@bayer.com. Please note that we are recording this interaction and recording will be available at company's website. Presentation slides are available at the BSc website as well as company's website under the investors section. With that, I now request Mr. D. Narayan for his address. Over to you, D.
Thank you, Nikunj, and a warm welcome to all of you joining this virtual investor meet. I hope each one of you are staying safe. It's been a tough couple of years, and I hope things are getting better. It's the same for each one of you as well. And hopefully in one of the days in the near future, we'll go back to a physical investor meet, and looking forward to seeing all of you in person. So let me start with setting the context from an external perspective. To start with, what we have been sharing with you on the significant positive momentum we are seeing on the agri-policy environment is continuing, but also seeing momentum. The recent regulatory guidelines on gene editing is a major step forward and comes in the back of deregulation of drones that we saw less than 4-5 months ago. The second major trend is a strong feedback at the farm level seeking integrated solutions with a major focus on improving their farm incomes. The third trend, especially we are seeing in horticulture, with more connected supply chains starting to emerge, linked to city clusters and for agri exports as well, which could also see the need for produce certification. All these trends directly lead to the opportunity for establishing crop-focused value chains that are able to address the major pain points of farmers: good quality inputs, agronomy knowledge, labor shortage driving mechanization with a strong linkage to the produce markets as they harvest their crops. Hence the major push towards collectivization through the farmer producer organization, and also the new agri-entrepreneur-led last mile farmer connect models that are starting to emerge will all accelerate this transformation, with digital connect being a key enabler across the entire value chain. These models will also help deliver the sustainability goals of improving water efficiency, soil health, and also the potential to reduce environmental emissions at scale, which are absolutely critical to deliver, especially if you consider the context of climate change. Who knows, in the near future, we might see Indian farmers generating carbon credits as a source of revenue as well. In summary, I believe we are moving to a decade which will see significant growth in Indian agriculture. Having said that, it's also important to factor in the dynamics of the world around us. While we are still recovering from the major impact of COVID globally, The global supply chains continue to be stressed, and the current Russia-Ukraine situation has compounded it with a number of import-dependent countries around the world who are likely to face significant challenges of food security. For us in India, we need to manage through these emerging challenges, especially the availability of fertilizers and the impact to globally connected supply chains for the crop protection industry. Added to this is a challenge of inflation, despite the strong efforts of the government to keep it in check. In summary, as an industry, we will have to weather through the storm with prudence to meet the planting needs of millions of smallholders of India, and also to meet the food security needs of the country, which I'm sure we will successfully overcome, because just 2 years ago, we faced enormous challenges of COVID and could collectively meet the challenge. So I can clearly say that while we do have short-term challenges, the long-term environment continues to be extremely positive. With that, let me turn it over to Simon Thorsten to start walking us through his perspectives on Indian agriculture, but also the performance of the company. Over to you, Simon.
Thank you very much, Dee, and namaste. Welcome also from my side. It's a pleasure, though being virtual, to be with you today, and I look forward also to the questions later on. Summarizing a little bit what we've done since integration, I would say we've been on a very strong trajectory with an initial focus on the channel, specifically aligning the placement with liquidation as a priority. Now, what is developing now is a more holistic go-to-market, which is focusing on farmer needs. Specifically, what we're looking at is income increases, but also predictability of that income. We're looking at reduction of farming burden per se, seeking better produce quality, but also production convenience. And clearly, a stronger emerging theme is the sustainability, where we look at things including soil health, water savings, and obviously safer applications where, for example, drones are a great opportunity. Still, the channel is important. What we aim for is a very tight, fresh inventory management. And that's where really the old focus continues to be the new focus as well. At the same time, we need to extend our reach. We need to get onto more shelves. And we are aligning new alternative channels with the existing partners, which is sometimes a challenge, as you can imagine, with emerging e-commerce. For that, partnerships is the key. So really better life farming centers as an inclusive model to scale up and help the farmer expand the channel and really collaborate with others. Farmer producer organizations, Dee has mentioned it, the collectivization of farming in India will be a theme which is super important. And to this also connections to food value chains, where not only do we want to help farmers to sell their produce, but to ensure that the quality meets what that channel, the food chain actually needs. On the crop and portfolio side, we're driving further the differentiated portfolio, targeting more acres and farmers served. We're launching big on a basis of building strong team confidence before the launch. And we're looking at broader offerings also via collaborations with partners. On the people side, we continue to invest into knowledge of our people, especially towards agronomy and digital developments. All this needs to be supported by a better digital backbone. So we're really focusing on enhancing the Farmer Connect with digital tools such as FarmRise. We're improving channel convenience with digital order and account management tools, and further upgrading also our liquidation tracking to meet the goals mentioned before. We can go to the next slide, please. Operationally, we see continued strong demand for buyer offerings, driven both by market pool creation, but also good channel sentiments. We see a continued swing of the market towards herbicides, driven by labor shortage and convenience needs. And there has been COVID-induced supply concerns and some inflation expectations, which drove strong channel demand during the first quarter. From a liquidation perspective, it's very pleasing, may I say so, to see that the liquidation and the channel placements are actually starting to converge, which leads to a more synchronized growth, with sell-in more or less matching the sell-out. We have had broad gains across crops and the portfolio offering, and that actually represents a little bit a, may I call it risk diversified business, where sometimes in the past you would have had one crop per season. We are now really able to satisfy broader needs, and as an example, looking at fungicides to drive quality much, much more. Hybrid rice was tough for us, and it is still challenging, though having had now a good quality production and sensing a lot of confidence in the team, I do look forward to a good rice season. On the decarb side, clearly, we had a strong rebound in spring, which was driven by higher acres, but specifically, again, an excellent team effort around being competitive, but also launching a new hybrid. Better Life farming centers for us are exceeding 1,000, and we count. And this is increasing the attention and interest by partners. We have almost 5,000 sabagis, which are marrying rural entrepreneurship with significantly increased farmer reach for us. And with that, I can really say that our new business models are starting to scale to relevance, leading to a more diversified go-to-market model per se. We go to the next slide. I'd just like to share two examples. We just had a fantastic launch on decarb 9208, which was very important to us because of our strong spring position amongst the rising competitive pressure that we had on the existing 9108 franchise. It's an excellent example of a big launch on the basis of a great preparation by the team in terms of confidence building with farmers, with the channel, but specifically also with the team itself, taking a call and going for more than 10 times actually the usual launch quantity that we would enter a market in. The hybrid itself is exerting excellent heat tolerance, which currently is actually a big, big plus, but also representing a great opportunity in the silage segment, which is growing right now. Another important launch to mention is Vallejo. It's a new class of diamide insecticides. It's relevant to us because we will expand this franchise, having a good list of label expansions coming in, but also looking at mixtures and seed treatment opportunities going forward. It's currently in rice and soy, but we expect labels into things like the corn fall armyworm, which is going to be an important segment as well. With this, I'd like to hand over to Simon to run you through the figures a little bit. Thank you very much.
Thank you, Simon Thorsten. So hello, everyone, and also warm welcome from my end. I will now walk you through the financial performance during the quarter, and of course, also for the financial year that ended in March 2022. As you can see on the left hand of the slide, our revenue from operations increased by 31% to 9.6 billion INR during the fourth quarter. Major factors driving this growth were A, the rebound of our spring corn, and B, new product launches such as Vallejo and Decarb 9208. In addition, positive crop sentiments resulted in increased revenue from operations. Let me also comment on the profit before exceptional items and tax for the quarter, which more than doubled compared to the previous year to 1.9 billion. Major reasons for that achievement were the increase in volumes and a favorable sales mix with the higher spring corn seeds. Moreover, price increases enabled us to partially offset inflationary pressure. Now let me zoom out a bit and comment on the full year performance, where we recorded a revenue growth of 11% to 47.3 billion. This growth was mainly driven by increased crop protection volumes based on effective demand generation, newly launched products, and also the scaling up of our alternate business models. As a next step, let me move on to the profit before tax and exceptional items for the year, which remained flat at 7.9 billion. Main reasons for that development were first, a sales mix impact as overall corn seeds sales remained almost flat. Second, an increase in our employee expenses, mainly due to incentive payments. And third, a normalization of our operating costs back to pre-COVID levels. Kindly also note that our profit after exceptional items and tax for the full year increased by 31% to 6.5 billion. The main exceptional item for the current year was the profit on the sale of part of our seeds distribution business for 0.6 billion. Regarding the tax, the previous year included a one-time tax expense of 1.3 billion under the VSB Act. Please move to the next slide for a balance sheet review. So our overall balance sheet increased by 3% to 43.5 billion. Let me share some comments on the main developments here. As you can see, so trade receivables increased by 2.5 billion. That was mainly on account of higher Q4 sales. In addition, we also saw an increase of the DSO from 60 to 75 days, which is still well below our standard payment term. Our cash balance reduced by 35% to 7.8 billion, as on top of the annual dividend of 25 rupees per share, we also paid out the special dividend of 125 rupees to commemorate our 125 years of Bayer in India. This also resulted in a reduction of the shareholders' fund by 1%. Please switch to the next slide to review the cash flow. As you can see in the blue box, cash flow from operations was at 2.2 billion compared to 6.9 billion for the previous year. The main factors I want to highlight here are the changes in working capital due to the increase in receivables, as I explained in the previous slide when we looked at the balance sheet, and also a build-up of the paid inventory, on the one hand, in anticipation of the Kharif season, and on the other hand, due to the higher carryover from corn seed returns. An additional factor for the reduction was the taxes paid under the VSB Act. Changes in the cash flow from investing activities were due to the exceptional proceeds from the sale of part of our seeds distribution business that I mentioned earlier. And lastly, changes in cash flow from financing activities were mainly on account of the dividend payout. Thank you very much for your kind attention, and I now hand over to Narayan to wrap up.
Thank you, Simon. So let me wrap this up with some key summary points. As we execute our strategy and grow our business, we are strongly committed to partnering to improve farmer incomes, drive sustainability goals especially around water efficiency, soil health, and reduction in carbon emissions in major crops like rice. We also believe strongly on the need to increase women participation in the agricultural ecosystem. This includes our strive to hire more women in our commercial organization into frontline sales and agronomy roles, supporting women agri-entrepreneurs to own and lead better life farming centers, but most importantly, give access and knowledge to create visibility to numerous women farmers who are playing a key role in Indian agriculture as we speak. Leveraging our core strengths of product and business model innovation, we will continue to strengthen the Indian food value chains with strategic collaborations. We will continue our efforts to select, develop, and attract best-in-class talent, which will be foundational to deliver both on our vision, but also on our long-term goals. Finally, we commit to proactively managing the near-term challenges without losing our long-term objectives, and we will deliver sustainable growth and uplift smallholder farmers in India and beyond. With that, I will transition back to Nikunj, and then we will move on to our Q&A section. Over to you, Nikunj.
Thank you. Thank you very much for the presentation. We now open the session for Q&A, and I again invite Simon Vibush and Simon Bridge again. Thank you. So we have received a couple of questions already through chat functionality. So I'm taking them one by one, and I'm combining a couple of questions together. So first one is about sales breakup, and Simon Bridge, perhaps you can take this. The question is, please provide breakup of sales in terms of domestic agrochemical and corn seeds, exports, traded seeds for Q4 FY22 and FY22.
Okay, so let's say for the Q4 of the financial year, the sales mix was for domestic agrochemicals 75%, domestic corn seeds 19%, and exports 6%. Looking at the whole year, it was for the domestic agrochemicals 82%, domestic corn seeds 11%, exports 4%, and also the traded seeds 3%.
Okay. Thanks, Simon. There is another question. What is the outlook of Decal going forward with recovery in commodity prices? So Simon Vibush, perhaps you can take this.
Yeah, happy to. Thank you, Nikunj. Yeah, on the back of a challenging 2021 season, the recovery in spring was obviously very important for us, and that's what made the corn season, and as Simon just said, flat. The Kharif outlook at this point is positive, although we see competition for acres. All crops are actually at this point yielding quite good farmer prices, what we see, but still we do expect good acres and potentially also a good corn seed season.
Thank you. The next question is, what were the top 5 products for FY21-22? Simon Bridge, perhaps you can take this.
Yeah, sure, I can take that. So top 5 products are Decarb, Roundup, Nativo, Lotus, and Anthracol.
Great, thank you. Now there are a couple of questions on alternate business models. Simon Vibush, perhaps you can take this. Can you talk about customer key accounts and alternate business model vertical, and how it's adding value to the organization and future growth prospects?
Happy to. Yeah, I mean, it all starts with size and diversity of the country, and electricity helps. Sorry, our acre share still remains significantly below where we would like it to be, and to be able to achieve a better acre share, we actually need dedicated business models to serve different segments also profitably. So what we did build is a separate org to focus on commercial key accounts, as we call them, and they basically work with food value chain partnerships, they work with e-commerce, they work with a differentiated smallholder portfolio, and additionally also industrial business where we would be exchanging compounds with also competitive companies, really to increase our CP and seeds footprint.
Thanks. So Simon, again for you, the question is on new products. Please give an insight into short-term growth drivers of CP and seeds portfolio with specific focus on new products. And what are the new products launched in FY21-22 and what are the plans for the next financial year?
Okay. Yeah, we fundamentally believe that the Indian ag input market will continue to grow, and that on the back of increased investments by farmers, as well as driven by consumer and industrial needs, right? So main drivers for market value increases, to my mind, will be continued lower labor, so labor shortage basically, but labor cost as well. Grower convenience, produce quality, and a continued need for pest management. We just saw it, for example, with the thrips attack that we had in the south on chilies. Additionally, from my perspective, environmental aspects will influence grower practices, leading to, for example, more direct seeding in rice. We will see a mix of increased demand for our existing portfolio, and that's important. And this is why I would like to differentiate and say, I talked about new launches because these were very special new launches. So the existing portfolio will actually continue to drive. And we want to add to our appeal, obviously, with new franchises like Vallejo. On the rice seed side, we need to widen our footprint over and above the 6444 portfolio that we carry. And in corn, we do see sustained growth in the country as a crop per se. And we believe our current, but also our future portfolio places us quite well. We have challenges in the Rabi season, but we do hope that with new hybrids coming online, and it's a little bit questionable whether we'll get marketing authorization this year, but latest next year, we will be also more competitive in that season again. At the end of the day, it's clearly the team that will drive the success. And I fundamentally believe also our new business models will create more reach for us.
Great, thank you. So there is another question on ES divestment. Perhaps you can take this. Can you please share ES divestment status and impact on the company's revenue?
Yeah. Thanks, Nikunj, and thanks for the question. So you're all aware that globally in March this year, we announced the divestment of the ES business. Obviously, this is still work in progress, but for the India piece and via Cropscience has to go through the approval of the board and finalizing the sale with the new buyer. At this point in time, the size of the business within the Cropscience portfolio is around 1.5% of the overall business. So it's a very small part of our overall portfolio in India today.
Thank you. The next question is on synergy. And Simon Bridge, you can take this. What is the quantum of revenue and cost synergies accrued in FY22 post-merger? And I'm covering another one as well. Do you believe most of these synergy benefits are already achieved by the company?
Okay, thanks for the question. So when it comes to the achievement of the synergies, we've mentioned that also in some of our previous investor meets, the combination of both business allowed us to achieve the synergies that we anticipated. We also, in that context, also stayed below what we estimated as a one-time cost scenario. But I also would like to flag here that the ERP system integration is pending and is expected in the years to come. The general statement going forward, of course, we will continue to invest into our strategic initiatives, while we also will maintain our prudent spend management. Back to you, Nikunj.
Yep. Thanks, Simon. The next couple of questions is on RM cost and price increase. Simon, if you can take this. RM costs have gone up worldwide for AgChem industry. How is company dealing with this? And I'm clubbing another one. Are generic companies more proactive in price increases, and do you anticipate further cost pressure and price increases in upcoming season?
Right, my favorite. Well, I mean, the increase in input costs have been driven by global inflation in base materials, production shortages, and supply chain disruptions. That's a fact. Also, we as a company, and I think Simon alluded to it already, implemented price increases and will continue to monitor our position versus both the costs but also market dynamics. Given our usually deep and integrated global supply chain, we might not see as erratic a cost of goods development as spot buyers do. Yeah, so we do anticipate underlying inflation in COGS to continue, but we will react, as I said, according to really our cost position and the market dynamics. Currently, what you see in the market is still a mix of products, and especially in the channel, you're still holding them quite some inventory from last season by some competitors. So not everybody has as much as a channel discipline as we do, and so from that perspective, really to get price clarity, we expect this to emerge rather when channel replenishment happens for the Kharif, to be really able to make a call on the market dynamics of it.
Thanks, Simon.
Yep.
So there's one more question, and perhaps Dee, you can take this. This is with respect to glyphosate products. So what is the status of glyphosate products in India? Are there any restrictions around that?
Yeah, so thanks for the question. First of all, we've been fairly clear in terms of our global position on glyphosate, and the other big piece of that is all the regulators globally where glyphosate is sold have fully backed the product as a safe product. At this point in time, we have all the necessary licenses and registration to sell glyphosate, and there is no litigation on glyphosate in India. Nikunj.
Yeah. Thanks, Dee. So there's another question on inventory, and Simon, perhaps you can take this. The question is, sir, our year-end inventory has increased by approximately 200 crores to rupees 1,512 crores. So in a rising price scenario, is it correct to say that we'll be enjoying inventory gains? If you could kindly elaborate on how inventory is getting valued in our books.
Well, let me comment in this way. Let's say, of course, for us, inventories are valued at lower cost of the cost of acquisition or the net realizable value. So you can expect what that will also mean going forward.
Okay, while we are at it on inventory, there is another question on channel inventory. Simon, you can take this, I guess. There has been an increase in closing channel inventory of March 22. What is the impact of this on receivables and liquidation? And is this a risk for the next financial year?
No. Simple answer at this point, no. The quarter itself saw demand from the channel, partly also in anticipation of some potential supply constraints. So rumors in the market, but also the channel, expecting price increases and hoping they can still get a good deal on some deliveries. But also, really, we started with a very low channel, and they gave us an opportunity. We did see some earlier buying, absolutely clear. But at this point, the channel inventory is of no concern, and we're approaching the Kharif, and really that's where where also the major liquidation happens. Having said that, there have been also good liquidation months at this point, so overall, nothing to be concerned with. And Simon has alluded to it already. We are deliberately, let's say, not incentivizing early payments and cash payments where it's not necessary. So we are extending a little bit our payment terms deliberately.
Okay, thanks, Simon. So I think we have covered most of the questions in our presentation or to other questions. I can see one more question on direct tax. And Simon, perhaps you can take this. Could you provide guidance on effective tax rate going forward?
Thanks for the question. So, as you surely know, so one of the main factors determining our effective tax rate is our corn income. And we have also been consistently maintaining the position that such income is exempt from tax. So now for the tax rate going forward, of course, changes in the corn income, therefore, will impact our effective tax rate.
Thank you, Simon. So I think we have covered all the questions. Yeah, just one, and I think perhaps we can take the last one coming from Aditi. Company has given out rupees 125 dividend in November 2021 and rupees 25 as final dividend. Considering the company's robust performance, can we expect a similar kind of distribution of profit? And do we also see the same ramping up in next 2-3 years? I think B, you can take this.
Yeah, Nikunj, this is always the most favorite question in every investor meeting, right? So first of all, I hope everybody is, happy with the dividend that we paid out, signifying 125 years of buyer. But having said that, the answer that I'll give you this year is going to be the same that we always consistently give you, that we'll be prudently managing the dividend payout. It'll factor in both our short-term needs and our long-term needs, and especially some of the emerging challenges that are out there that we talked about through the entire presentation. So preserving liquidity is going to be very critical at this juncture. But having said that, you've seen our track record on how we handle our payouts, and so you'll continue to see it in a way we maximize our return to shareholders.
Thank you.
Back to you, Nikunj.
Thank you, D. And I think with that, we are also exhausted with the questions we have received. So with that, again, ladies and gentlemen, thank you very much for taking out time and attending today's investor meet of Bayer Cropscience Limited. We thank you for your support and association with us and wish you good health. Stay safe and take care. With this, I close this investor meet. Thank you once again.
Thank you.